What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about AMZN.com. No, we are not going to go shopping right now. We are going to take a look at the Q2 results, which came out after the bell for Amazon. We'll take a look at the revenue growth. We'll take a look at the all-important third quarter guidance as it relates to Amazon. We'll compare that to where Wall Street's expectations were, and we'll see, at least in the early after hours of trade, shares of Amazon are popping a little bit, up over 7%. We'll see where they finish towards the end of the day, and obviously rolling into a Friday trade tomorrow. Now, we'll get into all of the financials as well. We'll take a look at the revenue, all of the all-important expenses at Amazon, and see how that trickles down to an operating income. We'll take a look at the segment results. There is something happening here at Amazon where if they're able to repeat these results in these segments, this stock is likely just beginning its ascent even higher. We'll come over here and look at the different business units the company operates under, including the all-important AWS segment, and then we'll kick it off with the cash flow statement, or that's what Amazon kicks things off with. We'll round things out with cash flows and show you how that is rolling with Amazon, and then obviously we'll come over here and look at the stock chart. If this stock's momentum continues to move higher, there should be some resistance up above. We'll talk about those levels here in a moment. Amazon over the last year, despite the rapid 50% increase in shares over the last 8 months or so, over the last year, the shares of Amazon are actually down. They're down about 4%, and shares are still off of the 52-week high, which is closer to $146 per share. Q2 revenue came in at $134.3 billion. We'll come over here and show that to you from a revenue perspective, and then walk you through all of the expenses. Also, very important, we got third quarter guidance as well. Sales expected to be between $138 billion and up to $143 billion. We just said that very quickly and very casually. I want to remind you that is for 3 months. That is not for the entire life of the company. That's not for the next 10 years. That's not the guidance for the next fiscal year. That is for the next 3 months. This company is going to generate $138 to nearly $143 billion in sales. Wall Street was expecting a number close to 138.29. The high-end estimate was up at $142 billion. So if Amazon eclipses that $143 billion, and this is a company that just beat expectations by just a cool $2.9 billion, that I guess means conceivably we could come north of $145 billion worth of revenue for Amazon, well outpacing the expectations, as this company looks like a low double-digit grower, at least according to Wall Street. Now, in terms of operating income, Amazon expecting $5.5 to nearly $8.5 billion worth of operating income. That's a surprise, considering last year they generated just $2.5 billion worth of operating income. If you're wondering where Amazon stood in the most recent quarter, we'll get to this number more in depth, but it was about $7.7 billion. So for the upcoming quarter, we're expecting a continuation of operating profits for Amazon between $5.5 and up to $8.5 billion. The aforementioned $143.4 billion worth of revenue, that was a shade or under 11% growth year over year. It did beat expectations. On the cost side, what we are seeing is, look, you had a nearly 11% rise in your revenues. Your fulfillment costs did not go up that much. And obviously this company, while they will deal with kind of the wage increases and the labor issues that UPS we're dealing with, well, Amazon's insulated a little bit. They've got their own delivery network at this point. Technology and infrastructure growing a little bit. Sales and marketing just ticked up mildly, and your general administrative also ticked up. So your total operating expenses over the last year on a quarterly basis went from, we'll call that 118 up to 126.7. So you take this 134, you minus off 126, and you get that operating income number that we talked about at $7.7 billion. Folks, last year on a quarterly basis, it was just 3.3, and this is a massive, massive improvement over where you were a quarter ago, because you see for the last 6 months, the Company's generated $12.5 billion, and that includes 7.7 in the most recent quarter. You see, for a 6-month period last year, the company didn't even get to $7 billion. This was a fantastic quarter, and some of Andy Jassy's cost-cutting measures and streamlining of operations over at Amazon clearly, absolutely clearly starting to show up on the financial statements. If you will pull down to a net income number, comparably, it looks absolutely fantastic, but it does include some things like interest income and some other income, which, again, compared to last year on a quarterly basis, looks a lot better. That is why we tend to stop at operating income, because it can get a little bit messy and a little complicated underneath that. Now, here is probably the news of the day as it relates to Amazon. Here's your North America. These are your net sales. This is your AMZN.com kind of bread and butter type of sales. You notice those went from $74 billion up to we'll call that $82.5 billion worth of sales on Amazon.com. Your operating expenses also ticked up, but look what also exploded. Operating income last year, it was a break-even business, lost $627 million. This year, $3.2 billion. And I know, off of $82 billion worth of revenue, $3.2 billion of operating income. You know, look, we're not going to do a song and dance right now, but here's what I want you to compare it to. Here's your AWS, which, again, the bear case argument, which is relatively accurate, is that Amazon primarily makes all of their profits from their AWS business. Most quarters, that is pretty much true. Here's your operating income over at AWS in the most recent quarter, sitting at $5.4 billion. Folks, look, and I'm not expecting this number to repeat all the time, but based on the guidance that the company gave us for Q3, operating income coming in a similar range to the operating income that we just put up in the most recent quarter, I've got to imagine that the North America business is probably going to be producing positive operating income. And here's where your levers are, considering the competition in the cloud computing game and the amount of investment that the company has to do on the server side, particularly as it relates to AI build out. Amazon is a little bit behind, quite frankly, behind Microsoft and Google. So the more profits they can squeeze out of a massive amount of revenue that they generate selling goods online is a good thing. And $3.2 billion, imagine increasing these operating results just a couple of percentage points every quarter. And we're talking about very tangible results. In fact, this company looks like potentially at some point, these operating profits could actually exceed the AWS profits. And I'll tell you what, folks, that is not priced in the stock. Now, it's not the full story. You still have that international business that is losing money to the tune of $900 million in the most recent quarter off of, we'll call it, $30 billion in sales. Operating loss, though, improved over last year, where you lost about $1.8 billion. Again, that improved to about a $900 million loss. They still have some work to do in that international market, but if that business can scale up as nicely as the North America one has, and then they can roll back those costs, get those efficiencies on the delivery side, or however they're pulling these efficiencies in, well, all of a sudden things look pretty nice. We'll look at the AWS growth rate from a revenue perspective pretty soon, but what you are seeing is operating income starting to contract. Notice on lower revenue. So last year on a quarterly basis at AWS, you had $7 billion worth of net sales. It ballooned to $22 billion and some change on sales. But look at your operating income. It's going in the wrong direction, from $5.7 billion down to $5.4. There's more competition here. They're having to do, maybe they're not publicizing kind of price drops or price reductions at AWS, but if you threaten to leave AWS or if you want to negotiate a better price, AWS is very much willing to do that. And they're also they definitely have higher operating expenses as they are having to continue to invest in these servers. AI build out is something that hits the CapEx almost immediately. You don't really see the benefits of it until much later on. And then on top of that, those AI workloads are far more expensive than traditional compute. Now, speaking of AWS, it grew just, and I say just, 12% on that revenue side. That is by far the lowest growth rate that we see there. And so that is why I spent so much time pointing out the North America business from an e-commerce perspective has really swung positive, and it gives us a good sign that the company is guiding to more operating profits in the upcoming quarter as well. That is because, again, you have a slowdown in growth from a revenue perspective at AWS. You also have a slowdown in the profit margins that business is able to generate. Now, can this company reaccelerate it? Probably to a certain degree, but the big double-digit growth rate of AWS, those days are over because of Microsoft and Google and just the nature of the competition of that business. But the company still has a dominant position in online stores that grew, we'll call it 5%. We'll X out foreign exchange. Physical stores up 7%. Your third-party sellers grew at about 18%. Subscription services, this is your Prime, that grew 14%. Advertising still growing at a very healthy 22%, which if you compare it to what Meta was doing in this quarter and Google and Microsoft, they break out their ad business as well. Well, this is really very fast growing, obviously, and that is a fantastic business. And finally, you have your other, which a lot of that has to do with their MGM acquisition that was up 26%. Now, Amazon leads off their financials with a cash flow statement. They tell you that they have $49 billion and some change in cash. They pulled down a net income number of $6.8 billion. Last year, you lost over $2 billion. You add things back in like depreciation, like stock-based compensation, and you come down here and notice that last year, you had positive operating cash flow of about $9 billion. This year, $16.5 billion positive. That's absolutely phenomenal. See, for the last 6 months, it's ballooned to $21 billion. For the last 12 months, you're at $61 billion. This is not revenue. This is operating cash flow. You are generating that much. Now, the other thing that we want to see here with Amazon is your investing activities on the purchases of property, plant, and equipment. Notice this has started to scale down, which is exactly what you want to see. And this is exactly one of the reasons why the North American business from an e-commerce perspective is starting to generate some actual real profits. Is your purchase of property, plant, and equipment last year went from 15.7 down to $11.5 billion. So that means off of our $16.5 billion worth of operating cash flows, we only, and I say only, burned through about $11.5 billion on purchase of property, plant, and equipment. You did some debt issuing, debt refinancing. All in all, things looking pretty darn good over at Amazon. So I do see why the initial reaction in the stock is higher and not necessarily lower. If you just strictly focus on the AWS numbers, they're probably somewhat concerning, but the company's done a decent job telegraphing the fact that their revenue is starting to flatten out here, and there's a lot of competition on the pricing side, and the company doesn't have a dominant position in AI to charge a premium for those types of services. Look, Amazon will admit it is behind the 8 ball, and behind the curve is probably a better way to put it. If they had AI already built out, AWS would be soaring in revenue growth. The truth of the matter is a lot of these startups and the AI upstarts in the space are turning more to Microsoft and Google for those services, among many other kind of smaller players that have started to pop up as well. But speaking of popping up, Amazon shares moving higher in the after hours, should meet some resistance basically where the shares are right now at 137. These are not areas where I'd be super excited about accumulated Amazon shares, where the shares are now from 137 up to 145. This was support for the stock for basically 2 years up here, and so you'd expect it actually going to be a little bit difficult for Amazon to kind of push up and over into this. Now, the good news is you've rallied off these lows back here at 82. You can even go a little bit higher at 90, even a little bit higher at about $100 per share. You've rallied really hard off those levels, needless to say. You could have pretty deep pullbacks in Amazon, and it's still kind of a resumption of an uptrend. So technically things look absolutely fantastic for Amazon from a cash flow perspective, and starting to control their cost really looks good for Amazon. Little concerned about AWS. Obviously, if that reaccelerates, this stock is certainly likely to trade back up into the highs that it made back in 2020, 2021. Minus an acceleration in AWS, this company has to start generating large profits, operating profits from the North American business, not just in one quarter, not just for a couple quarters in a row where you have Prime Day and a holiday season, but quarter after quarter after quarter. If not only North America, international starts producing these types of numbers, well, yeah, this stock is going to do very well. They're going to have lots of cash flow, lots of profits coming. And again, if AWS can come back to a certain degree, that certainly will continue to move the share higher for Amazon. In the after hours, Amazon shares moving higher, as you can see with these results. Makes some sense. We'll see where the shares trade tomorrow, but until then, we'll be back again very soon, and good luck with your investments.